Hello friends, welcome to Nirmal Bang. I'm Piyush Jain and today we are going to put the focus on commodities, crude oil. We'll also talk about currencies. Very important because of late we have seen a couple of news events happening across the globe. We heard what Saudi Arabia actually came about, a bit of surprise for the markets when they said they had an intention of cutting their daily production. Usually when the production gets cut, it's positive for the prices. But when you take a look at the data, the fundamental data which is coming out, like US crude oil inventory, that actually was much higher than anticipated by the market, and that was a negative data point for the prices. So what actually implies is the production cut being announced by a major like Saudi Arabia, primarily because they are seeing a weak demand outlook. They don't want the prices to go down, so they actually are throwing you all kind of triggers. Or basically, the Asian demand is very strong, like the Indian demand or the Chinese demand. So where are we right now? To understand all of that, let me now welcome my very good friend and an industry expert on the subject matter, Mr. Peter McGuire, the CEO of XM Australia. Peter, as always, welcome to the show.
Well, lovely to join you, Piyush, and greetings from Sydney, Australia.
Well, Peter, now help me understand what's happening in the crude oil market here. Are the producers trying to give us a false hope? Is the demand weak or the production is too much? What's happening there?
Well, I think there's many components to this whole equation, Piyush, and when you're thinking about what happened over the weekend in Vienna, normally I'm at that meeting. I attend those meetings twice a year in the May-June period, and of course at the end of November. And we had the oil minister from Saudi, Prince Mohammed bin Salman's half-brother. He said only in the last week that if you were short crude, you're going to get a bit of an awakening. So he believes that short sellers are going to be squeezed. It's a time not to be short, and he took some necessary action in some ways to probably try and get a higher price for crude in the short to medium term and slow down or put a hold on 100 barrels a day of production. And in turn, the winners were the UAE, and Saudis are going to take a haircut in the sense of their production numbers, and they want to see higher crude prices than what we're currently achieving.
But from that perspective, coming out on their own, announcing a production cut just on their own, was it signifying that the other OPEC members were not on their side? They were not sort of comfortable in doing any sort of additional cuts? Because we heard the cuts last year also. What that signifies?
Well, exactly. You know, they're building on those previous cuts that we had probably the best part of 3 or 4 months ago. And with that was the realisation that everyone, I don't think, wanted to cut from where their current positioning was, but they saw that their Saudis were prepared to take some action on this. Remember, they are probably the largest, as well as Russia, the largest producer, and they've been mindful that, you know, as far as price. Remember, take another viewpoint also. You had a very strong US dollar coming back to October last year, but the US dollar index sitting at around 114. I just had a look at it right now. It's at 104. So it's a very big washout as far as the value of the dollar. And that's another consideration that, you know, they want to see a higher price. They've got their own budget forecasts, and they need to try and achieve that style or that number moving forward.
So, from a perspective of price action, if suppose any of our viewers they were taking positions, or if you are actually taking a strategic call, maybe near term or medium term, where are we right now? How are you comfortable in terms of taking a strategic call? Are we at the lower end comfortably sort of to take a bullish call, or we are somewhere in the middle?
I think that $70 is going to be a difficult target to stay under for a longer period of time over this Northern Hemisphere summer. So you've got additional driving season, you've got geopolitical concerns and what happened yesterday with that Ukrainian dam. You've got the situation in Taiwan. You've got certainly the ongoing saga with Russian crude, and you've got weather. Traditionally, you have weather outages with hurricanes later in this season, which is the end of July, start of August, is the start of the season. So all of those components, I think, are going to be a catalyst to push crude prices higher. I take on board what you're saying as far as slowdown in China, slowdown from a lot of nations with higher inflation, but I still think that crude prices in the short to medium term will stay above 70 and not below 70.
Right. So should we go long from here? I'm trying to push you towards the hard question here.
Well, yes. I think you've got to be very mindful that you could see what we saw on Monday morning was a 5% move to the upside. So that was a time to be long. It's given up some of those gains, but I think that there's more momentum to the upside than what's looking at the downside. But it's a terribly volatile market, as we know, and things can change within 24 or 48 hours that totally dismantle your prognosis of why you want something to be long or you believe it's got upside, and then that changes due to differing factors that go into news events and the reality of the market. The market's incredibly elastic and volatile.
Well, before I go to my favorite topic, which is currency, I also wanted to borrow your mind on any other industrial commodities which at present you are liking. Could be base metals, could be the industrial metals, gold. Again, when we are talking about the base metals here, is there anything which you're liking amongst all of them?
I'm certainly still liking gold, and I still like silver. I think that they're undervalued at the moment. Gold's at the back at 1980. It's been very choppy. It's been again volatile. Big price swings. Silver again, I think, is still relatively cheap for an ounce of silver. There's been underinvestment in it, and I think its best days are ahead of it, not behind it. I've noticed that copper's had a little bit of a run up in the last couple of days, a little bit stronger than that 7,800, back at about 8,300 per metric ton. And I'm keeping an eye on what's happening with dollar, what's happening with inflation, what's happening with interest rate policy, central banks, and unemployment numbers. And again, if you hear extremely geopolitical-based news, then that's going to spike precious metals. And I think that the US dollar might come under a bit of pressure, and I think gold's got another leg up.
Well, Australia is looking great, as same like India. But when you take a look at the macro data, the European numbers, there is a common theme which is moving across Europe and across America, and that is that the services sector is holding strong. There's a lot of activity there. PMIs remain in green, very firmly above 50. When you look at the manufacturing data, you actually tend to get a feeling that for the last sort of 2-3 months, the momentum actually remains slightly concerning, both across Europe and also across USA. The manufacturing PMI numbers are not giving you that comfort. And when you see that, and when you actually take a look at the metals, especially between the gold and the industrial metals, like one group is typical industrial demand, and the second is when there is a slowdown, you actually go towards gold. So from that perspective, what's your own hunch? Are we looking towards a deepening slowdown as we move towards June and then beyond June, July, August, September? Or you think that we are just grinding our way?
Well, I still believe that it's going to be a lot tougher second half of the year than the first half of the year. I think inflation's really starting to bite. I think the interest rate policies are starting to impact Main Street and Wall Street. I'll impact Wall Street soon. I'm conscious with the debt ceiling, what's going to happen there as far as the issuance of bonds to the tune of about $500 billion, 100 million or so. And I'm just seeing it all play that it could be a very volatile equity market from July to December. That 6-month window for the second half, I think, is going to be, you've got 10 big stocks out of the S&P 500, 10 big stocks do extremely well, and you've got 490 that aren't performing very well at all. So the big monsters are making big cash, and a lot of the greater majority of the smaller companies that compared to the likes of the Apples and the Alphabets and so on, are just grinding out. They're having a very tough time, meeting their own forecasts and expectations.
And then actually, when we see all of that and we take a look at the dollar, what's your perception about the dollar? And when I'm saying dollar, dollar index, dollar versus euro, dollar versus pound, what is sort of view shaping up there?
Well, if we get a rate rise this month out of the Fed, and I'm not suggesting, I don't know whether you're going to. I think it's a toss of the coin. But at the moment, I'm possibly saying that yes, I won't be surprised if they have another rate rise. There's the first part of it. If you don't get it in June, you'll certainly probably get one in July or the next meeting. So there's the first part. The second one is I think the US dollar, if you don't get a rate rise, it'll come under further pressure to the downside. You'll see probably a bit of a bounce, maybe the euro a little bit and maybe the pound. But those currencies are very, very choppy, and you're waiting for some big data to drop so we get a true indication of where we go to next.
Okay, so from that perspective, ideally if the rate increase might happen, then you actually could get a perk up on the dollar, and that would imply a bit of dip in the euro dollar. Will that be a particular time you would like to wait for really going long on euro dollar? If your own opinion is that perhaps dollar does not have much steam.
Well, I want to wait till about the 14th. I think that's the meeting, and that's when they're going to talk and decide. So that's my understanding. So it's only a week away. Next week will be a big week. Pardon me. In the meantime, I think it's a good time to be consolidating, see for opportunities, and just wait till those numbers drop. That's a true indication. Then we can get an appreciation how that all sets us up for trade, because they're big concerns, and we've got a possible rate rise out of Bank of Canada today. We had one in yesterday with the RBA in Australia, the Reserve Bank of Australia, up 25 basis points. It's the highest rates have been since April of 2012. So, I'm not surprised. I'm not surprised by surprises, Piyush.
Right. I'm just tempted. Allow me to ask you this question. I'm just tempted. Yeah. I was trying to sort of join your perception and opinion about all the currencies. Will that also imply that once we are past that major event where we see the last rate hike, and now we know that, okay, no more rate hike is going to happen, so the dollar actually does not have any major tailwind? Does it imply that gold, which has been consolidating since many, many weeks, that perhaps could be a time for another round of takeoff, and bulls perhaps would be coming back in gold next month?
Oh, I won't be surprised if that happens. I think a lot of people are bullish, and they're very concerned as far as what's going on from a global theme perspective. And big percentage of traders out there globally follow the gold market extremely closely, because it never ceases to disappoint. There's always movement, and that's an exciting part for a trader.
Well, let's move towards the conclusion of our conversation. I'll ask you 3 or 4 sort of currency or commodities. We'd like to take your view, either bullish or neutral or bearish. If I say gold, what would that be right now? Neutral, bullish?
Bullish.
If we say dollar?
I want to see what happens next week. I can't go out on a limb. If I don't get a rate rise, I think it's going to come under pressure to the downside. If I get a rate rise, maybe it's already baked in. You might see a 104.50. We'll just have to wait and see. But remember, that can be for a week. It's very hard to forecast where it's going to be in a month's time. It's hard enough to forecast where it's going to be in a day's time.
Right. And the last one, my favorite, I always ask you, is that give me only one of your favorite pick right now, which for which you are making strategy or you're liking to take position.
I think that you've got to look closely at gold, because equity market's fully priced. I want to see what happens with the equity market situation over the next couple of weeks. I'm not suggesting it's going to tank in any fashion, but I think it's very, very toppy and it's frothy at the moment. And I'm just sitting here seeing how it all plays out, and I'm keeping a very close eye on gold.
And you still see the Brent crude with the possibility of going to 85, 88 for the next 2-3 months?
I won't be surprised if it's certainly through 80 and quite easily, quite possibly above 85. But that won't surprise me over this northern hemisphere summer. I get a feeling that that's how it's going to roll, and I think there's some push to the upside. I'm conscious as far as the big picture, but I think that there could be factors that could drive it higher.
Well, dear viewers, Piyush is very good actually in giving the sort of bigger picture always. For the next 2-3 months, we'll also connect again with Piyush once again. But we pretty much have an idea how the asset classes are moving up and shaping up. Piyush, as always, it was a pleasure talking to you and sort of getting all your expert cues, your keen insights over all the global commodities. Thank you for coming on the show.
Well, it's lovely to see you, Piyush, and to all the viewers over there in India. And greetings from Sydney, Australia. Thank you.
And with that, we come to the end of the show. It's a wrap. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.